All right, welcome. Been a good few days since the last update, so today should be a good one. Be able to go through things again and get some discussions in. I've been away for a couple of days, just visiting family, so back now. A little bit more active in terms of trading. Some bigger decisions to make, and kind of further discussions. But focus for me today is probably traditional markets, less interest in trading crypto at the moment, so majority of my focus will probably be on the Nasdaq today, and seeing what the reaction of the Nasdaq's going to be in this area here. Still, I'm identifying or looking for this area as a potential top region, and SPX is starting to join in terms of looking relatively shitty up in this high. So I'm also going to be keeping a pretty close eye on that. There's a nice 12-hour divergence at the moment forming, so pretty good all round, I think, for me to be having a look at today. We'll start off with BTC though. Why would we go elsewhere? Alright, so a couple of things to discuss since we last spoke, which is, firstly, we still have to consider this, number one, as the overall range, right? Okay, between these two boundaries here, 40,000, 32,000, that's kind of the range that we're looking at. We know from last time we had our consolidation region here, and well, actually our consolidation region was like this. And then we had, obviously, the drop out here. So we had the drop out from our potential triangle region here. And basically it did kind of exactly what I hoped it would do, which is look at attacking the lows here, take out this cluster here. We covered this on the daily update, and then recover back inside the range. And that's exactly what we've done. Now, the reason that that's happening is because, like we've discussed, this is a significant sell-off. It's highly likely that we get consolidation and a range forming versus continuation of this, especially when we start to see the potential here for some solid divergences. So at the moment, we've got really good divergence structure here on the daily time frame using the Awesome Oscillator. So we're not using RSI for this, although there is still technically one on RSI through this region and through each of the lows. The AO just displays this in a far cleaner perspective here. And remember, I'm using this at the moment because it's slower and it gives me a better overall picture of the current market conditions from where we are. So I like this at the moment. The daily picture here certainly gives us the idea that BTC might try and head up into the 41,000 region, try and tap into the top of this range. So we've seen now, and again, keep this in mind whenever we're looking at ranges. What we've seen is we've seen an attack on this area here, attack on this set of lows, and we move over here. We even take out this low over here. So we've had a real run of the range lows, and now what we've got is we've got some levels to the upside that we think could be attacked as a result of this. Whenever we're in ranges, they are constant exercises in essentially liquidity. So we're just looking at stopping out as many people as possible on each of these up and down moves. So now what we have is we have a high here in this region, and then obviously we've got our highs over here. So we've got this high over here, and then we've got these two little highs over in this region. So now that we've had this run to the downside and we've attacked here and we've attacked here, I would now suspect that we go here and we attack here. Right? So we continue the pressure up here, and we attack these, and then we'll probably drop off towards the end of the month back down into this region here, and end up back at the mid-range and just continuing this process. Now the reason for this, and you think about this from a higher time frame perspective, or you think about this from a larger player perspective, one of the key things that we've got in a region like this is people need time to build and establish their positions. Okay, they need time to be able to take the positions that they want to take. And they can't just do that by marketing in. These are activities that are usually very carefully planned, and buys and sells will be very well established and orchestrated in terms of getting the most value from BTC. So if you're a larger player and this is a bottom, then you're not just marketing in 100% of your position here. All right, you're going to look at being the buyer here, here, and here. All right, you're going to be looking at basically buying below 34,000 every time that we get down there. So I think that's important as well, to just keep in mind that that's the reason we have these ranges develop, is because people need time to position. People need time in order to facilitate, the purchasing of BTC and managing their positions. We saw something similar when we were down at the 10k region here. Okay, so all of this price action here, lots of consolidation here, ready for a markup, and the same here, right? We've seen lots of consolidation in these regions before we've had moves to the upside. And we know that this area here should be no different. We should be no different in a region like this in terms of spending time to consolidate. So for now, I think BTC is still range bound. I think given that we've taken out the lows, the next logical step would be to look at taking out the highs, which brings us into that 41,000 region. Now, obviously, the big thing hanging over everybody's head is the Finex shorts picture. This is the big thing that CT is discussing at the moment, is this huge build up of short positions on Finex. Now, the trouble with this information is that we don't know what this information is going to translate into. We don't know whether or not this is somebody hedging their position. We don't really know what this relates to. Now, each time that we have had a large Finex short build-up, we have resulted in some correction. We have had a strong correction. But at the same time, there have been multiple instances where Finex built up longs over an established or a long period of time. You can see here over 2 months on this period here. Then we got big closures here through the next 2 days. So I think we just got to be careful attributing too much information to this. Now, if this situation, because you've absorbed all this information about Finex shorting, is starting to kind of skew your mindset, then that's fine, because you can just take a step back. I still don't think that these conditions are the best conditions to trade. Like, sure, you can play lower time frame on this, not a problem, that's all fine. There's some pretty nice stuff going on here, lower time frame. But, like, if the Finex situation is causing you worry or concern, then just don't trade. Right? It's super simple. Don't trade. Because we don't know what the outcome of the Finex short position will be. We don't know if it's some fucking PsyOps mission. We don't know if it's a legitimate build-up of shorts until, potentially a larger sell-off in BTC. We don't know what that looks like. So from my perspective, if you find it affecting you, and you're, not able to take position effectively, or you're not trading as well because you're nervous about this build-up of shorts, just chill, alright? Don't trade. You're not missing out on a huge amount here anyway. You're not missing out on, the markup to 100,000. So just relax. And like I said, we don't know what to make of Finex shorts. Historically, yes, it's resulted in a correction. Is that information helpful? Because if everybody knows that historically it has resulted in a correction and this time it doesn't, is that the plan? Right, so we still don't know. Even though our data can suggest that it has resulted in a correction, maybe that's exactly what they want you to believe. So a difficult situation. All I'll do is continue playing the chart on lower time frame if I'm going to be scalping this price action. Let's cover off Sol. And we'll cover off kind of thought process around the trade that I took. So, the Sol position was a really nice one. And I explained in quite a lot of detail in the channel about why this position was taken. So essentially, just a strong AO divergence here across the highs. Looks as though it was a prime opportunity to try and head lower. Sol was also very, very strong in terms of the recovery. So my target was here, $30. And I managed to get 50% out of the position before being stopped at break even. So when I say break even, being stopped at my entry. So overall, I was kind of really happy with how I played this trade. But at the same time, the strength of the recovery was a relative surprise to me. It was a very strong recovery on Sol, and I did think that we would probably spend a little bit longer down at the lows in order to bounce to the degree that we did. Now, with that said, made some very nice moves down here in order to realize that profit at really sensible opportunities. Right, so we took good money off the position when we first had the initial impulse down at $40, and then started scaling out of the position essentially at $36.50. Now the reason that I started to scale out of this position and really moved out of the position for 30% of it by the time that we bounced back up to $36.50 was because of the divergence that we had down here. So we had a nice divergence down on the hourly lows on Sol, and therefore this was an opportunity. Once this started basically confirming here, this was a good opportunity to remove more of that short position. We remove the short position to that degree because what we want to do is we know that a bounce is coming because we can see a bullish divergence down at the lows. So we know a bounce is coming, and therefore we can reposition for another 50% to make a 100% position again after the bounce. But we don't want to hold all of our short position through a setup like this, because it doesn't make sense, right? We realize the danger, we take 50% of the position out, and then ideally what I would have liked is a retest up here, okay? And then obviously a continuation to the downside, which I didn't get. So all I can do is move the stop here to my entry, and if it stops me out, which it did, then I take 50% of the overall profit that I could have got from this position, but we end it as a winning trade. So the only sadness is the aggressiveness in which Sol recovered through this region, but the confluence here for this setup, and the confluence as well for me keeping 50% of the position open, I think was there all day long. So happy with how I played it. Shame about the response that we saw in terms of, from my perspective, very strong off the hourly div here, but obviously good for anybody on Loma's side of the trade who took the long position. Let's go over to ETH quickly. So ETH not as strong as BTC, right? Not as strong as BTC. But doing a relatively decent job of holding up here. I say not as strong as BTC, it's actually incorrect. Like, if you take a look at the way that ETH has held up, then you make a pretty good argument that ETH is stronger than BTC through this region here. But at the moment, intraday, BTC has been the one with the power from the bounces from the lows. ETH's action has been a little bit more grindy. BTC's action has been far stronger in terms of the impulses that we've seen and movement away from these regions. So BTC at the moment, the one driving the market again. What else shall we look at? I don't think there's a huge amount else to kind of to really stare at the moment on crypto and BTC. Like, again, just because this is ranging, everything else is doing similar. You know, there are some outliers here that are having strong performances. Like Wu, for example, is very strong on the breakout here and the climb higher. But like, everything else is kind of just stale and quiet and boring. The only one to bring it to your attention is Aave still, because it's up against this very important level. So this is such a huge level for Aave now through here at 320. Like, it has to hold on to this level at all costs, because if it loses this level, then, you know, there's a long way down here. So Aave really has to try and hold on to this level. You know, it's very, very clear that this level is the one that needs the protection. But yeah, I mean, like, crypto, boring as shit, because BTC's ranging, nothing else has got the bollocks to do anything else apart from copy BTC and range and chop around. And so, again, intraday plays are going to be your best thing, scalpers are going to have the best time, range traders are going to have the best time, those who are going to actually put time in front of the PC to sit and watch the price action are going to have the best time. Those of you that are spot trading or swing trading, it's, again, still not the environment for you to be partaking in. You know, the only thing that you may want to consider is whether or not you have the courage to long BTC up into the top of the range here at 41, 42k. That's the only thing that you would want to consider in a position like this. Strong daily div, Potential to try and push the upside and attack some of the highs there, just the same way that we did with the lows over here on the last dip down. That would be the only consideration that you may want to have in your head if you're a kind of a slightly higher time frame trader than scalping or range trading. Everything else, for me, is all about the indexes. So it's all about what's going to go on with the Nasdaq, all about SPX. Like, I'm not interested in anything else aside from playing these. And equities. So there's a couple of interesting equities that we can cover off. First one I want to cover is Apple. Apple is in a really, really nice position over here. So Apple's got a strong trend line over here. It's been supporting price through here since September 2020. So this is a very, very important trend line. This is something that we've seen, 1, 2, 3, 4, 5 clear touches on. And potentially some concerns in this area with the lower high if we do get this breakdown here. So Apple is sat at a very important level. Now, to kind of add some confluence to that, we've got a really nice monthly RSI bear div. We can just about see it on the AO here between these two peaks. Okay, so we can see in here, we've got the higher high into this and then the lower high over here. But again, it's far clearer on RSI. Let's add it in just so I'm not just telling you, I can actually just show you. Okay, so we've got the divs here between the two highs. Here's the first high and here's the second high. Okay, so diverging the highs here on Apple. With our confluence of this, so I'll be buying more puts on Apple if we start to break down through the trend line here. I think that's a clear and obvious play at the moment for Apple. AMD still in a relatively uncomfortable position here, still holding on to this bottom support. This candle here swept the whole of the lows, which is a really good sign for AMD from a bullish perspective that we managed to sweep the lows here. But we can see structurally, okay, this isn't a great structure now for AMD in terms of, here's our, not our text box. Here's our low, here's our high, here's our lower low. Alright, here's our potential lower high into breakdown of the neckline into the retest of this important level down here. This news here, this breakout here of this big consolidation range for AMD was basically on the news that Intel was fucked. Right, that's what happened with AMD. That's why it broke out of this range so aggressively and so strongly to the upside, because Intel basically announced that it had fucked up bigly, and AMD just took the reins. And so it would make sense to come back down to this level. It's such a significant breakout region through this level. This was 5 months of consolidation down here into a huge breakout on AMD. So if we do visit down here at 58.60, then I think I'll probably take a more aggressive long position on AMD. But in the current position that we're sat at, I think that this is a potential short opportunity. And again, as soon as this level breaks here, then I think we get the easy move through all of this, right? There's nothing here. There's just nothing here. There's just gaps and inefficiencies. And so if AMD does break, then we do get this play, right? This is coming. If it breaks. Other things that are kind of interesting to me at the moment are like cannabis as a whole. It's an area of the market, that and mushrooms, that I've been interested in for a long, long time. And I still believe that probably we are in the region of time of bottoming for cannabis stocks. A lot of people will remember the great canna boom of sort of 2018. Where we just had shit like Tilray just going, parabolic, and once again, crypto traders panicking about missing out on these opportunities here. So when Tilray got listed, we got this huge rise up here into the 300s, and then all the way back down, obviously over the course of 2019, 2020, and then into a little bit of a pump here in 2021. And I think that, for me, kind of the bottoming formations are beginning for Tilray and for some of the other major cannabis companies that we see in the space. I think this is a really good looking area at the moment to be thinking about whether or not you would like spot positions or what that might look like for you. I'll cover those off, I think, in a little bit more detail. I might split the videos just so people don't have to listen in if they're not interested in traditional markets. I think it's probably a good idea to split those. So what we'll do is we'll end this video here with not a huge amount more to talk about from crypto's perspective, aside from BTC's continuing ranging, not knowing what to do with Finex short positions, and essentially, if you do not feel comfortable in the market, do not put your money anywhere. Right? Just sit out. Don't be led during times like this by people who are calling moon or doom, or start quoting different targets, or people saying we're 10% off the lows already. Like, who cares? Like, it's a fucking range. Who cares what percent you are off the lows? You'll only be visiting the lows again in another month, so it doesn't matter. It doesn't matter. It's like, if we go up and we get the highs, then everybody's going to be screaming bullishly before we eventually turn around because we're at resistance and everybody got hyper bullish again, and we just repeat the same process all summer. The best situation that BTC can have here, the best potential groundwork that it can put in now to establish the foundations for a run higher, is by ranging this region. That is genuinely the most bullish thing that you could ask for, is ranging this region. Because if we range this region and start to break up, then it's all-time high territory that we're going to go for. Because then this is a classic accumulation range. So what we're looking for is simply an extended period of time where people can buy BTC at an acceptable price before we start a markup or a rally. So just don't get carried away. Always keep in mind that, like I said, the larger players need time to position. Okay, they need time to position. And we're at a different price point now in comparison to where we were at 3, 4, 5, 6, 7, 8, 9, 10k. Right, we're at a different price point. So again, it requires a little bit more nuancing in the positioning of BTC at the moment. So that's the best thing that we can possibly look for. Nice big range, extended period of time. Allow the big boys to buy their BTC, and then we'll mark up again, and the good times will roll later in the year. For now, don't get distracted. Don't let yourself change mentally into panicking about missing moves higher. You're all good. You're fine. You'll have plenty of time. Plenty of time. We're not even considered technically bullish for a long time yet. So don't worry about missing moves. You're literally just going to cause yourself pain in an area where there's no reason to have any pain whatsoever based on the PA. Alright. So let's pause up there, 22 minutes, and I'll record a bit of a traditional view as well. So anybody that's interested in equities, traditional markets, can also come over there and have a look at what I'm going to be discussing. All the best, take care, and I'll catch up with you guys a little bit later on.